Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate reports. This time we're diving into Horizon Space Acquisition 2, Corp's annual report. Don't let the space part fool you. This report might be more down to earth than you think. Get ready for some financial twists and turns. This company is a special kind of company called a blank check company, formed to find another company to merge with. It's like corporate speed dating. We're going to break down what that means for its future and if it's on track to find its match. Horizon Space Acquisition 2 Corp is a blank check company. This means it was created not to sell products, but to merge with or acquire another company. Their goal is to find a private company to take public, providing that company with easier access to funding from investors. There's a big rule hanging over them. The target business they buy has to be worth at least 80% of the money they have in their trust account. Think of it like this. They can't use a huge pile of cash to buy something tiny. They have until November of 2025 to make a deal. If they don't find a company to merge with by then, they might have to give the money back to their investors and shut down, but they do have the ability to extend the deadline, but the sponsors have to pay for it. This could cost them over $1 million. That's a big decision that could lead to large amounts of interest. Because of ties to China, Horizon Space Acquisition 2 Corp may pursue opportunities in China. If they acquire a company based in China, there are big risks they must consider. Chinese laws can be unclear, and the Chinese government could change regulations impacting how the combined company can operate. This could make it more difficult for the company and cause the value of securities to significantly decline or even become worthless. The company lays out a few criteria they're looking for in a business combination. They want a strong management team, long-term revenue visibility, companies that would benefit from being publicly traded, and high growth potential. If they happen to buy a company that doesn't meet these guidelines, they promise to disclose it to shareholders. As of March of 2025, there were over 9 million ordinary shares issued and outstanding. This number tells us how much ownership has been distributed in the company. Here's the results of operations. The company made a net income of $142,877. That may not sound like a lot, but it is a turnaround from last year's loss. Most of this income came from the interest in their trust account, which totaled $24,530. Keep in mind their net income is impacted $3. They can't celebrate just yet. They still need to make a deal. As of December 31, 2024, Horizon Space Acquisition 2 Corp had around $646,720 in cash and over $69 million tied up in a trust account. Having a decent amount of cash and money tucked away is the hallmark of this type of company. They need funds available to pursue an acquisition target. The Financial Accounting Standards Board issued some new guidance on income tax disclosures that could impact the company's future financial reporting. The company says they are evaluating what impact, if any, this might have on their future financial reports. There are a few big investors who own more than 5% of their shares. Some of these include Highbridge Capital Management and Mizuho Financial Group. The company adopted a clawback policy. This means that if the company's executives make some errors, they could have their compensation taken back, which is to prevent fraud and mismanagement. One big risk to consider is that it may be difficult to enforce legal judgments against the company's officers and directors, some of whom are located outside the United States, particularly if it's in China. This could cause issues if investors want to sue due to financial penalty, and it may be impossible to do so. So what's the verdict? Horizon Space Acquisition 2 Corp faces a high-pressure race against time to find a suitable merger partner and faces considerable risks if they invest in Chinese markets. While the company has cleaned up its act with a net income this year, it still faces going concern due to the merger deadline. If you are interested in special acquisition companies, subscribe and enable the notification bell to get updated when a new video is out. As always, thank you for watching.